Hello, thanks for joining me today on my channel, and this is Discovering My Dividends. And today I want to talk about kind of a combined strategy of using dividend, portfolio trading, or not trading, investing, and swing trading. So with those two combined, obviously they're very different things, but why would I want to have a dividend portfolio where I'm swing trading? Well, if I'm holding a lower amount of cash, I am potentially not getting the earnings that I want out of that to be a passive income, and of course I am not able to quickly move up my total investment amount, my portfolio value or worth at a significant rate. So now the dividends do usually pay out quite well, so that is a good thing. But on the other hand, if you don't have very much money, you're not going to build that wealth very quickly. So combining strategies, definitely important. So why would I do a swing trade if I want to have dividend portfolio? Well, for example, say I have 50 different stocks that I'm investing in, and I've got each stock worth 2% of my overall portfolio is kind of my estimated goal. And I've got a stock now that I see there is future value. With that stock, I have that potential to swing trade it. If it's below what its potential value is, I'm going to go ahead and buy more of that. Now for that particular stock, I might get up to 5% of my portfolio value. And so I put that money into that investment with the hopes that it's going to move up relatively quickly within, say, a few weeks or a few months. And now I'm looking at maybe a 20 to 30% gain. Now when I sell, I'm not going to be selling off the entire amount, but of course, this is a dividend stock that I want to hold long term, but I want to take advantage of the fluctuation in pricing. So what I'm going to do then is I'm going to take that initial amount, that 2%, and I'm going to preserve that. So I want to have 2% of my overall portfolio remaining, or between 2 to 3%, whatever value you think is worth it. It's now overvalued. I'm hopefully getting at least a 20% gain on anything I sell, and I take those shares and I sell off that portion that's over and above what the 2% of my portfolio would be, and hopefully it's now between 3 to anywhere up to 8% of my overall portfolio, because it's risen significantly. So I recently had a swing trade where I was able to get over 70% gain on that particular stock, and that was a little bit of a luck because there was something happening with the stock that I knew was happening, but I didn't actually foresee it having that kind of effect on the price. And so again, a little bit of luck, even though I knew there was that potential for the value of the stock to go up. All right, so with swing trading, we are basically taking stocks that we feel are going to have that potential to rise in value, or they're below what their current value should be at. So say it's worth $10 on the books, it's actually showing as $8. You buy it for an $8 stock, you can now sell it at a $12 stock. That's what you're looking for. The thing to be aware of here is when you're looking at stocks that have that potential trade, like they have that history of fluctuating prices, where you can have anywhere between like a 15 to a 30% fluctuation anytime within a quarter or a year. You also have to be aware that there's stocks out there that have potential for growth, and you don't want to mistake those stocks and sell them off and then they don't drop so you can rebuy them. And you don't want to really be selling off stocks that have that really long-term growth potential. So when you're buying those types of stocks, you want to pay attention. Like for instance, Apple, if you had bought the stock many years ago when it was very low in price, and then you sold it off because it had like a modest gain of 20-30%, you'd probably be very upset today that you got rid of those stocks, even though the dividend payout right now is quite low. So stocks with lower dividends may be something you want to hold on to long term, and just pay attention to whether or not those stocks increase their dividends over time, because if they do, something that's paying a low dividend now could still be a high payout for the price you end up paying for it on today's market, right? So just be aware that there are stocks out there, growth stocks, that you don't want to trade as a swing trade, because there's a different type of potential there for those stocks to have growth and really increase your portfolio. So swing trading is going to be a part of my portfolio strategy right now, because I want to grow my portfolio quickly, but I still want to have dividend stocks or maintain dividend stocks. So any mistakes that I made I'm hopefully making them with stocks that I'm going to want to hold long term. So if I don't get that quick turnaround or that trade that gives me kind of a quick gain, I still have a stock that I want to hold on to, and I still have that potential for that dividend to pay me out long term. All right, thanks for joining me today. Have a great day. We'll see you next time.